You've heard it a million times. Be smart with your money. Do your research. Don't be one of those dumb investors. But what if I told you the dumbest investors often win? Not because they know something we don't, but because they don't know the one thing that ruins everyone else: themselves. There's a story that's been floating around Wall Street for years. Fidelity Investments, one of the biggest asset managers in the world, once ran a study. They wanted to find out which of their clients had the best investment returns. The results shocked them. The investors with the highest returns were the ones who forgot they even had accounts. And I'm not joking, some of them were literally dead. Those forgotten accounts outperformed the living. Why? Because they never panicked. They never sold at the bottom. They never tried to time the market. Their money just sat there, compounding quietly, while everyone else was busy being smart. That's the irony. The smarter you are, the harder investing becomes. Because smart people overthink everything. They read every headline. They chase every trend. They believe they can outsmart the market. But the market doesn't reward intelligence. It rewards patience. It's not an IQ test. It's a psychological test. And most people fail it. Every few years the market crashes. And every few years investors make the same mistake. They get scared, they sell, they miss the recovery, and they promise never to do it again. Meanwhile, the so-called dumb investors, they don't even notice the crash. They're too busy living their lives, and while everyone else panics, their money keeps growing. If you had invested $10,000 in the S&P 500 in 1980 and done absolutely nothing, you'd have over $1 million today. But if you missed just the 10 best days in that period, your returns would be cut in half. And guess when those 10 best days usually happen? Right after the worst crashes. So while smart investors are selling in fear, the dumb ones are accidentally winning by doing nothing at all. Because the biggest enemy in investing isn't the market. It's you. It's fear. It's ego. It's that little voice saying, get out now before it's too late. But the market doesn't reward the loudest voice. It rewards the quietest hands. Think of it like planting a tree. You don't dig it up every week to see if it's growing, you just leave it alone. The dumb investor forgets about the tree. 10 years later, they're standing in the shade. Studies show the average investor earns less than half the return of the market itself. Not because the market failed them, but because they couldn't stop touching their portfolios. They bought high, sold low, and repeated the cycle. Meanwhile, the people who didn't do anything, the ones who didn't optimize or predict, quietly built wealth. Because the market doesn't reward action, it rewards conviction. The dumbest investors win not because they're brilliant, but because they're too naive to get in their own way. They don't overanalyze, they don't panic, they don't chase, they just invest, forget, and let time do its job. And that's the real secret. In a system built on fear, greed, and noise, the calmest investor is the smartest one. So maybe the lesson isn't to be the smartest person in the market. Maybe it's to be the most boring. Because in the long run, boring beats brilliant. Every single time.